We're going to look at Google. Over the 5-day, it's down a little bit, but this stock's really been doing well. It's up 8.4% over the 30-day, and over the 1 year, it's up 39.6%. You can see that the company was not the favorite to the market for a little while here in the year. Just negative stories were really circling, Alphabet. But I'll get into why I just think very highly of the company and why I'm an investor and will continue to be an investor. But really, after hitting a really low point in September, the stocks really worked. And look at the PE 25, 22. If you look at some PEs, like, Palantir as an example, it's just a crazy, insane PE ratio, 370. It's like, oh. And you look at their growth, you're like, okay, 24% growth, 16% growth the year prior. And you're like, okay, we know that Alphabet is dominant in their markets and they're growing about the same rate. So it's like, why is Palantir so expensive? I don't know. Stock market always has its own style, its own momentum. Investors will buy what they think they ought to be buying. But look at Alphabet, 25 PE, 22 next year. Strong buy, and it's priced close to its value, 8% discount. That's very reasonable. I'll show you where I think this company's discounted, and actually I'm pretty close to that number. So when we look at Google Alphabet, we are talking about, of course, Google search, and we're talking about YouTube, which I'm streaming on as we go through this live stream. And the thing about Google is the businesses that make just so much darn money for the company is Google search and YouTube. And what's beginning to make a lot of money for the company is their cloud business. They have a public cloud hyperscaler business. It's Google Cloud Platform, GCP, and it's doing really well. It's growing really nice. It's making money. It's kind of Google picks businesses where they know they can do really well. They can grow. They have strategic, advantages in that space, and it's going to make a lot of money. And Google Cloud is certainly becoming that business. And in that business, what is kind of lost in a lot of the news on Google Alphabet is that they developed their own chipset for AI. And in fact, Apple used it as well as other companies. So not necessarily to compete with NVIDIA, but because they're just a really smart organization. They started it 10 years ago. And now that's really a really good strategic asset for them, is they have their own chipset for AI. They also have quantum computing, which just announced, and there's no commercial use for quantum computing at the state where that technology is at, but it really shows how intelligent the organization is. So we got quantum computing included in this company. Robotaxi is probably the exciting new business that is going to be something. That could be the next YouTube. That could be the next big business for them. It is the leader in robotaxi. They have taxis that are driverless, driving people around. The public's getting really comfortable with it. And man, really exciting to see that business really take off. And then their AI business, their Gemini AI business. Now that one, I'm not quite sure how it's going to change the company. It might be that some revenue is moved from their search business to the AI business. But I think that Gemini AI is excellent. Google's AI capabilities are excellent, and they are a top 3 competitor in the AI application space. So we will see how things play out there, but I'm very comfortable with my investment in Google. Let's take a look at their margins and free cash flows. So they're growing the company nicely. It is a gigantic company, $339 billion. Okay. Palantir, $2.6 billion, like tiny. And the growth rate is not that exciting to me, but these guys are growing 14 on $339 billion. It's like, holy smokes. That's like $50 billion of revenue growth in a year. That's like a big company. That's a big size company. All right. So we have gross margins of 58%, free cash flow of 55 billion, and it used to be 69. They're putting a lot of money into their data centers where they're buying a lot of AI chips to build out GPUs, graphical processing units. A lot of them are coming from NVIDIA, and they're really investing in the robotaxis. So there's a lot of investment going into the company, a lot of CapEx, and that's what's driving down their free cash flow. But look at this cash flow over time. Holy smokes, this company. No wonder they're worth more than $2 trillion. It's just a lot of value. Historically, investors look at free cash flow. That's really what tells you a company that is really valuable. And their margins are very good. Now, their margins on search are like 90%, but their margins are coming down because their Google Cloud business, they're doing a lot of things to grow the business like AI as well as their robotaxi business. So that's what's been bringing down their margins a little bit. And they are a giant company, but 58% margins is very, very impressive. So that's their fundamentals. Looking at the valuation, so I have Google in my portfolio. And earlier in the year, I was buying more shares because it was more discounted, but the run up in the stocks really made it so that it is, in my opinion, discounted by about 10%. I think we saw analysts said it was discounted 7-8%. So I'm kind of near where analysts are saying, and I base it on free cash flows as well as earnings per share. To me, Google's another one of those obvious, hey, these guys are a big winner and they're going to continue to succeed. They have great advantages. They're very desirable. On really strong pullbacks, I buy into Google Alphabet. I put my big three that are like big companies that I just think are, winners are Meta, Google, Amazon. Those are the three that that should be a big part of my stock portfolio.